What's up, guys? Hope all is good. Today, I'm here to talk about real estate investing. We're going to be talking about 7 questions that you should ask your lender when you're qualifying for a loan. So before we get started, just want to introduce you if you're new to the channel. I am Nick Foy, the founder of Under 30 Wealth. This was a blog for millennials that are under 30. I started it when I was in college. I was trying to learn personal finance at the age of 19, 20, 21. I actually got started investing in real estate, bought my first property when I was 20. And a few years later, I bought a 3-unit apartment building. So I acquired a few different properties while I was in college and been running this blog for the last few years. Now I'm starting to make some YouTube videos about these different blog posts to try to share knowledge on YouTube as well. But you can check the link below this video to find the exact article we're covering today. So these 7 questions real estate investors should ask when selecting a lender. So below you're going to find several tips I learned when researching lenders for my own real estate investment business. The 7 tips could be explained in much greater depth, but we want to keep this blog post short. I want to keep this video short for you guys today. So each of these points below are, only going to cover the basics of what you need to know. All right, so here's the image if you want to pin it on Pinterest. I am active on Pinterest, so you can follow me on there. Question number 1. First thing you want to ask a lender, what are your terms? So usually a lender, they're going to look at the loan to value, meaning how much a loan is against the property's total value or purchase price. And a lot of times they'll loan 70 to 80%. So this means, you're going to have to put down a 20 to 30% down payment. So you're already probably expecting that if you're going to buy real estate, or if you're going to buy your own home or investment property, you're probably already aware you've got to put money down. Typically, banks do not like to lend 100% of the funding due to the risk. We saw that in 08, 09, all the people that defaulted on their mortgages. A lot of banks had to take back a lot of properties they didn't want. And so that's the case here with charging 20 to 30% down, and they're going to loan 70 to 80%. So that's what you want to ask first. What are your terms as far as, how much they're willing to loan, what the down payment needs to be, interest rates, if there's any points. So these are other things to ask about. Points are like upfront fees that you pay down the interest rate. So you might pay some upfront fees in exchange for a lower interest rate. So you're going to need to work out the numbers to see if it makes sense to pay a higher interest rate or a lower interest rate by paying up some upfront points. All right. Question number 2, are there any additional fees outside of interest and points? So for example, some additional fees lenders may charge are underwriting fees, documenting, legal, etc. So compare lender fees. Some waive different fees while others might charge them depending on how those types of loan institutions are ran. And some of the times they hand these costs off to you, and it makes your loan more expensive. So if you shop multiple lenders and you compare everything, you should be able to kind of get a better picture of what loan's going to end up being the cheapest. All right, question number 3. What's the loan and property criteria? So some lenders, they're only going to fund certain property types or price ranges. So for example, some lenders may deal with more expensive commercial properties, and they'll reject smaller loans for single family homes. I've actually found this before. There's properties in my city that sell for $30,000, and a lot of times you got to buy them all cash because a lot of banks don't want to make such a small loan on a $30,000 property. They'd rather go after the bigger fish and target those properties $100,000, $200,000, $300,000 where they can make bigger loans. So that's something to consider. Again, some loans might work for commercial properties while other loans don't work for commercial properties. So if you're going to like a residential lender, they might only loan up to 1 to 4 unit buildings. If you're trying to buy, like I was last fall, I tried buying a 5-unit apartment building, and I was trying to get qualified, and a lot of the lenders wouldn't do anything above 4 units. So it was hard to find a lender that would actually do a commercial loan for a 5 or more unit apartment building. So that's something to keep in mind. Question number 4. What does the loan timeline look like? So how fast can the lender turn around a loan? So when you get a property under contract, there's usually a clause that says the contract is void if you fail to get lending, but you still have to make an attempt to get lending. So as soon as that contract's signed, a lot of times you've got only a 30 to 45 day window to get that loan approved. So the paperwork needs to be shipped off to the lender immediately, and they can start that loan approval process. So before all that happens, though, you should always check with the lender ahead of time to see what their typical turnaround time is. That way you know on the contract whether you're going to need a 30-day close, a 45-day close, or maybe you got to push it back and do like a 60-day closing, meaning that you don't actually buy and take over the property for 60 days after the contract signed. All right, question number 5. Do you provide recourse and non-recourse loans? So what is that? So a non-recourse loan, it's basically the best type of loan you can get as an investor. It doesn't require your personal signature or any personal assets. So if, let's say, you're buying it with a company like an LLC and you get a non-recourse loan, they can only go after the asset collateralized by that loan. So in that case, if you're buying a 5-unit apartment building, and then the lender can only go after you for that 5-unit apartment building to pay back that loan. If you're doing the opposite, where you're doing like a recourse loan, if you can't make that loan payment, the lender might be able to come after your own personal assets. So they might be able to come after the house you live in, or the car you're driving, or some other expensive asset that you own that could help pay back that loan. So non-recourse loans is what you want to aim for. Most lenders probably will start with a recourse loan, and as you build credit over time and as you build credibility with your company, then they're going to probably be more willing to do a non-recourse loan for you. Question number 6, does the lender provide funds for rehab costs? So there are special types of loans out there that'll actually give you some additional funding to help you cover some construction costs or some renovation costs. FHA had a program at one point. It was called the FHA 203K loan. Not sure if that's still around today. You might want to check into that, but that was one type of loan where they help first-time home buyers get funding for a property, and then they tack on some additional loan money so that person can then get in there and start fixing up that property. Question number 7, how knowledgeable are you on projects like the one I'm working on? So the first questions were all kind of technical about the loan. Lastly, we want to talk to the lender about experience. We want to know, what the experience level that lender has, if they're going to be a good qualified person to work with to try to get a loan done on an investment deal. Because if the lender is slacking or screws up, that could make the whole deal fall apart, and that could cost you an opportunity to buy an investment property that could have been a nice return on investment. So you want to make sure you're dealing with somebody who knows what they're doing. So see what kind of experience they have, if they've done projects like what you're trying to do. When you sit down with them, tell them what your plans are and kind of see if you guys are going to be a good fit or not. All right, so that's our 7 questions today you should ask lenders when getting a loan. You can go ahead and read this article again to get some more clarification, but I pretty much covered it all in today's video. If you want to learn more, I do have a real estate investing school over here on my website, asknickfoy.teachable.com. It's a subdomain, a third-party website I run outside of Under 30 Wealth. So you can find links to it in my article here. I'll also link to it in the YouTube description below. But you come over here, it's a $99 course, which is on sale right now. It's fairly cheap. There's a lot of real estate courses out there that try to gouge you for $1,000 or for $500. I'm trying to give away as much information as I can for a cheap price. It does cost money to run these websites and to put time into making these videos. So I'm trying to charge, something for it, but I don't want to charge an arm and a leg. So it's only $99. You can check it out. But it does have the quality level that a $4.99 or a $9.99 course has, so you can be sure you're getting a good course for $99. Chapters, you can see the outline here, what's covered each chapter of the course, and if you want to see what lessons are inside of each chapter, you can scroll down here to the curriculum. You can see all the different lessons, and then when you sign up and you're enrolled, all you do is click the start button and it'll take you through the first lesson. When it completes, you move on to the next lessons and you can see which ones you've completed, which ones you haven't. It's a really cool software. That's why we're hosting it over here on Teachable at my domain, asknickfoy.com, asknickfoy.teachable.com. Sorry. I'll have it linked below in the description. Again, thanks for checking out today's video on the 7 tips to ask lenders. Make sure you subscribe to the channel and give the video a thumbs up if you found value.